Townsend Egliskis, and my channel is prioritizing education in multiple areas. These areas are financials, managing money, and unpopular truths that the mainstream media does not have any interest in showing you. In today's video, we will review the daily charts of the S&P, NASDAQ, RUT, and Dow. Also, we will go back to the newsletter, checking out those charts and see if any new thoughts, perceptions can be derived from them. Let's start first with the S&P 500. Looking at this daily chart, you see the accumulation on the volume profile. This range building is an important range in much needed digestion after that huge 16 out of 18 day consecutive run of green periods. There are multiple scenarios that can occur, and our number one job as traders is to be prepared for any scenario. We break out, we continue ranging, we break down, we chop. Anything can happen in the market. So our number one priority is to simply not be surprised by what moves occur. I do think that we have rested long enough for a breakthrough 710 and a push to potential 740 areas, but we haven't rested for more than 2 weeks. So although we have taken some time to digest, I don't love how much time we've taken, and the more time that we can hold above that 4650 area, digesting and consolidating, letting more buyers get aggressive, that will prepare us for a larger upside move. Now, we also have the potential breakdown, and you can't really predict that when we are on such a beautiful uptrend. Odds are that the bulls remain in control, but we can be prepared by understanding a few support levels. And on the daily chart, you see I have 4600, 4520, 4440, and yes, that would be a quite large pullback, but those are the most significant levels derived from the daily and the weekly chart. Of course, there are so many more levels, but that is when we go back into the 4-hour, the 2-hour, and smaller time frames. Now let's break down the NASDAQ. We are at new all-time highs, 16,480. We just broke through that area, and compared to the ES, this is a leader. The S&P 500 is lagging just a bit, but not lagging nearly as much as the Dow and the RUT, which we will speak on. If you look on the weekly of the NASDAQ, check out the huge accumulation on the volume profile around the 15,000 price range. That is what I mean when I see a beautiful downwards trendline channel get broken out. We had 3-4 weeks of just nothing but strong upwards aggression, and that is what occurs. It is the recipe for buying when we have a longer period of consolidation from the downwards channel. We had 6 weeks of downwards trend before breaking that, and what do you know? Everyone was bored for 6 weeks. All the bulls were just patiently resting dormant, and once we break that 6-week downwards trend line, look at the move. We went from 14,180 to 16,470 in a few weeks, a month. What a move. In my opinion, looking at the daily chart, it would be a mistake to go against this trend. Sure, you could say we are extended, but as the experienced traders know, extended markets can continue to be extended much longer than you can hold your loss. It's lunchtime EST on a Thursday. I would not be shocked to see us close around 16,600 tomorrow, ending the week off very strong. And maybe that is a bit super uber bullish, but when we're in a trend and the trend is so strong, the momentum is clear, you're much better off being with the trend the trend should always remain your friend. So now we're looking at the rut, and if you check out the weekly on the right side, that volume profile and the, oh my gosh, months of consolidation during that flag, it proves for a massive base. And when that base breaks, look at that move. We hit 2460. And this is healthy action truly when you get a pullback or a retest of the breakout area, as long as it's not on significantly larger sell volume than the breakout buying volume, then you really shouldn't be too worried. And that seems to be the scenario with the Russell. So it is weaker than the NASDAQ and the S&P. As we just reviewed, the S&P and the NASDAQ are just breaking out the new highs. The NASDAQ leading the S&P right at the new highs, testing that resistance. So Russell is lagging in comparison, but it just broke out of a huge base, and I really think this is just a recipe for a crack up boom higher. Sure, we have much digestion, which makes sense. After these upward moves, even in a bubble, which we're in, we're still going to have digestion. So the Russell, I expect it to, probably hold this 2350 area. Look at the daily volume profile. At 2350, that is where the accumulation seems to be. So there is that gap from 350 to 2400, but right above 2400, all that volume is there right again. So expecting the Russell to rebound and move higher as long as we don't see anything crazy occur. Here we have the Dow. We start on the weekly right side. It is very similar to the rut. It is the weakest of all four indexes, as the rut actually had a very clean base breakout. The Dow, sure, we did take out the highs last week, or a few weeks ago. I got mistaken with the daily chart. But now, looking at it, it is just not clean. This Dow chart is quite ugly, and it's pulling back, not horribly, but the weekly in comparison to the rut, oh my gosh, the rut looks so much better. So keep your eyes on the Dow. It might be the first leading indicator if the bears do gain control. I think this because it is the weakest of the S&P, NASDAQ, rut, and Dow. The Dow is completely the weakest. Anyone, even a toddler, you look at these charts and they're going to say, the Dow is the weakest. So I do put a lot of effort into these videos and these newsletters, but all I want is to help educate new people. For fuck's sake. So I do put a lot of effort into the newsletters and the videos, but it's effort well spent. All I ask, my only fee, please, if you learn, enjoy, laugh, have your brain tapped in any way, new thoughts, please just share this with one of your close buddies who might as well benefit from the content. It means so much to me, and let's all grow together. Just share the wisdom, bounce ideas off of each other. Much appreciation. What's the advantage in knowing trend following? Cheers, happy Wednesday. Today's Thursday. Today we will drive emphasis on the point of compounding, driven by a trend following machine. Do yourself a favor and consider listening to this fantastic interview with Jerry Parker, one of the original Turtles. Link here. So that interview was amazing. If you don't know Jerry Parker, he has made so much money by using a trend following system. So check him out, and the Unplugged Traders podcast, it's amazing. Compounding. Most don't consider the powers of time when pondering investment returns. If one allows their money to be reinvested into the compounding machine, it will grow substantially. To know a skill which has zero cap on the potential investable capital is uncommon. Trend following liquid markets allows for just that to begin. So first chart, we have ATH. Beautiful tight daily flag. Volume profile shows significant accumulation. Huge previous run from $70. Tight risk off 7-day lows. Solid candidate for a nice push through all-time highs. So we have ATH, and you can see I have my buy stop and sell in the system. I'm looking for that move through that critical 87-ish level, and look at the downward trend line, the volume accumulation, and yesterday and today's price action shows indecision. It is either on the brink of breaking out or breaking down, and in the case it breaks down, I'll cancel my orders, but I want my orders in the system, because if this thing moves through 87, potential to 91, first resistance, and way higher. I am very, very on top of the thesis. Let those winners ride. I'm up 10%, I'm not taking profit. 20%, not taking profit. 30%, maybe I'll scale out some. But we have to allow the winners to ride. And sure, you trail your stop loss gently, but you don't want to cut a winner too short, because that messes up the long-term probabilities of making money using the trend following system. DOMO, flagging on the weekly. Past 3 weeks have been very tight, which allows for a good risk off level. Has been consolidating for quite some time, so if it breaks out, the move will be strong. Swing trading is much easier to manage emotions, but you must be sure your position sizing is the correct size in comparison to your account. So we look at DOMO, and it has a beautiful consolidation of more than 10 weeks. That 98.3 is the high. We want to see a break of that downward trend line, and I do have my orders in the system. So you look at the right side at DOMO on the weekly, and it is so similar to the newsletter. We're only a couple of days later, and on the daily charts there will be many differences, but on the weekly charts, as long as it hasn't broken down completely, it is still worth keeping the entries in. Next we have HAYW, not a setup, but an example of what can happen when channels and trend lines are broken. This ticker is great. The volume picked up, as you can see, from the breakout point. This is what we were looking for, and you can let it ride. Be very careful about taking profits too early. Allow trends to continue higher. It's best for long-term probabilities. So almost exactly what I just said. None of this is magic. No one has a ball that predicts the future. But what we can do is manage the psychology. It is so hard because that inner voice says, wow, I'm up 20%. I want to take profit. I don't want to see this go back to 10%. I don't want to give back money. But with the outer knowledge and wisdom, understanding that that voice cannot be listened to, we must allow the winners to ride. Allow the winner to stop you out using the trailing stop. We can't take profits too early. If we do that, we ruin the probabilities. So let's check out HAYW on the daily chart and see if anything has changed. So here we're looking at the updated chart, and in this scenario, I might trail my stop quite close. We have 2 consecutive days on the daily of closing in the bottom 25% of the day's range. That signifies that sellers have come in and they don't want it to go through that 28.6 area. So in my head, maybe I would trail the stop 26.7, but I'm not in this trade. This was just one of those examples I wanted to share with my newsletter participants, because you have a beautiful downwards channel, just like so many of my other weekly setups, and look at that move. You break through the downward channel at 22 with a move to 28. That's $6, $7 per share. Oh baby. Cane, sugar ETF update. Very close to breaking out of this flag. This has plenty of room to run with a lack of resistance over 9.85. 10 weeks flagging is a great period of time. Look at how strong this trend is. Higher and higher with no intent to slow down. Look at that volume profile, and the thing that really gets me is, number one, the flag is high and tight. It's not one of those downwards flags, which are still wonderful, but personal preference, I like the high, tight, horizontal flags a little better. And above that 9.85, there is such a lack of volume in sellers. It looks like there's nothing until that 11 price point. So this, along with the fact that that breakdown in 2018 previous breakdown points are always going to serve as hidden resistance or support. That goes for breakdowns and breakouts. And in 2018, what do you know? 9 spot 8, that exact area that we have been flagging out for 10 weeks now, that is where we broke down. So that just shows you the hidden support and resistance within the chart. Here's the update on Kane, and you see I did get my buy stop triggered. My stop is in the system around 9 spot 3, but it looks like we have a potential fake out. So I would be lying to you if I told you that every breakout continues higher, returns huge profits. Some of them you're not going to be correct with. You have to trust the long-term probabilities. Kane doesn't look like it's horrible, but on the weekly chart, it's more of a doji candle, which is showing me indecision. We might decide to break through the all-time high. I think my trigger was at 9 spot 85, so the high is 2 cents above where I bought. Not a big deal. What I'm looking at is, how do we close on Friday? If we close very ugly, there's situations where it is just better to cut the trade even though it didn't hit your stop. If it's giving you some sort of sell signal, and this is a very fine discretional line. Sometimes if it's a ugly signal but not too bad, you hold it. But if it's horrible, say tomorrow we close at 9 spot 6, I'll probably cut this thing. There's no point in letting a fake breakout stop me out fully when I could clearly see it's a fake breakout. So it's a fine line, and this is the tough part about trading, because you do decisions that require, massive psychology. Sometimes you're right, sometimes you're wrong. You got to understand that it's okay. As traders, we are okay with being incorrect. It's hard to say. It's hard to comprehend. It's okay to be incorrect. Here we have natural gas, and on the weekly, you see we had a wedge. We broke down a bit, held for multiple weeks, and right when the S&P, the NASDAQ, all markets had that huge run through the downwards channel, looks very similar from nat gas. So that tells me nat gas, like most things, are a big piece of the market, and when the overall market goes up, nat gas does go higher. So while the NASDAQ and the S&P have been going high and tight horizontally, nat gas and the RUT, the Dow, have all been going downwards. It's not huge selling. It actually is still a nice flag, but maybe, number one, we need some more time for nat gas to break through the downwards trend line, or number two, we're actually not going to break through the downward trend line, and we may just continue lower and lower until this thing gets ugly. But with all the fundamentals, with Joe Biden, with the supply being cut and the demand remaining the same, I think nat gas, maybe we can continue to consolidate a little, but overall, I would be shocked not to see us retest the 2 spot 5 all-time high and eventually go higher. Here we have Tesla, left is the daily, and the weekly is a freaking mess. But what you could see is we had a ginormous base from July, and slowly, not a nice breakout, but kind of like a slow trend higher until the real breakout occurred through 800. Within 4 weeks, 1 month, going from 800 to 1200. That is literally 33% of its price in 1 month. What a move from Tesla, and now we zoom to the left side on the daily. This week, it has been one of the market leaders for the NASDAQ. What Tesla does, NASDAQ is kind of following. But now it seems Tesla is kind of digesting, and it makes sense. After such a huge upwards move, you get a strong sell from 1200 back to 1000. We hold 1000 for a bit, and now we're chopping between 1,100 and 1,000. So what I'm thinking is we just consolidate. We go sideways, we build a range from 1,000 to 1,100 for a few weeks at least. That's just my thesis. So if you enjoyed, learned, had your brain tapped, please share this with one bud who is like-minded, who appreciates hard work and effort, and really who cares about themselves. My purpose is to help educate you guys, along with reminding myself of the key principles that I would like to guide my life by. So let's eat healthy, get fresh air, be kind to others, and freaking let's compound that money, baby. We don't have to work for the rat race. As long as we are working on our brains, our growth, and trying to become the best individuals possible, remember, money isn't going to make you happy, or else there wouldn't be so many gang fights and all these rappers who have all the money in the world. They got the diamond chains, they got all their encrusted jewelry, they look awesome, they feel good. But do they really? Because so many of them have committed suicide. I can't tell you the amounts of countless rich mother effers, the rich people who are still unhappy. If you don't have self-worth, if you're not fulfilling and growing and helping other humans expand their capacity, I don't think you're going to be happy. So some way, somehow, we all have a purpose, a meaning, a reason for being here. To get swamped in drugs and chasing money and materialistic goods, money is great. It makes your life easier. It helps you out. It reduces stress because you have less to worry about. But it's a fine balance, baby. It really is. So respect yourself. Take care of yourself. Take care of the family. And live a life full of meaning. Don't become a materialistic type of person. Cheers. I'll be back soon.